Hi, this is Ann with Finance on the Offense, and if you're a small business owner or a freelancer and you don't have access to a regular 401k, you do have other options for saving for retirement. So in this video, I'm going to go over SEP IRAs and solo 401ks, what they're all about, how to set up an account, and then go over which might be better for you. All right, let's get started. Alright, so first we're going to go over SEP IRAs, and these are available for almost any type of business, self-employed people, sole proprietorships, LLCs, and there are other types of businesses that can use this too, like S corporations. But these are really great for single-person businesses. Now the great thing about SEP IRAs is that they're very similar to traditional IRAs. Basically your contributions are tax deductible, just like with a traditional IRA. But then when you hit 59.5, the IRS is going to ask you to pay taxes on whatever you withdraw from your account. And that includes the gains. If you want to learn more about how IRAs work, Roth and traditional, I have a whole video about that and you can see that on your screen above, right up here. Now here's something about a SEP IRA that's a bit of a drawback if you're a small business. When you put money into your SEP IRA, if you have employees, you also have to put that same amount into each of their SEP IRAs. And this goes for employees who left during the year. Also, the amount that you put into their accounts is fully vested. Vesting basically means that if an employee stays at a company for a certain amount of time, they get to keep the employer's contributions to a retirement plan. If the employee leaves before that time, the company will get the amount back that they put into that employee's retirement account. But with a SEP IRA, the employee gets to keep the full amount because it's 100% vested immediately. Okay, so how much can you add to your SEP IRA every year? There are actually two numbers to look at and you'll be able to contribute the lower amount. The first number we'll look at is the 25% of your business's profits, unless you have a sole proprietorship or an LLC, and in that case it's 20%. The other number is $57,000 for 2020 and $58,000 for 2021. So you'll need to look at both of these numbers, see which one is lower, and that is the maximum that you can contribute to your SEP IRA. Okay, so here's an example. Let's say you're contributing for 2021 and you're the only person in the business. Let's say your business makes $100,000. So on this side, you'll have 20%, which is $20,000, and then the second number is the $58,000. So in this case, you would have to go with the lower number, which is $20,000. So for 2021, the max you could contribute is $20,000. All right, so how do you set up a SEP IRA? Basically, you'll find a brokerage that offers SEP IRAs, probably most of them will. And this could be like Schwab, Fidelity, Vanguard. And it'll be just like setting up any other bank account. You'll have to enter all your information and all that stuff, and just make sure that you're setting up a SEP IRA account. Now, some banks will charge fees for this type of an account. So there might be account fees, transaction fees, but there are a lot of banks who don't charge fees. So just do your homework and find a good one that works well for you. I personally like Schwab because their SEP IRA accounts are almost fee-free. Depending on the types of investments you buy, you might run into fees there. And of course, there are expenses and there might be brokerage fees too. So anyway, once you set up your SEP IRA account, you'll need to add money to that. So let's say you add $20,000 just based on the example we just did. Don't forget that you can write that off your taxes as a deduction. After the money's in your account, you'll need to buy investments with it. I personally like index funds or ETFs that track the whole stock market or a sector like the S&P 500. But that is not investing advice. I'm just a random person on the internet. Choosing investments is a really personal decision. It depends on your situation, your age, how many years you have until retirement, that kind of thing. So definitely do your research and come up with the best type of investments for your situation. Okay, so let's look at the solo 401k. This one is great for you if you don't have any employees or if it's just you and your spouse. Other than those two situations, you cannot use a solo 401k. Now with a solo 401k, there are two components. One is you as an employee, because basically you're the one who's doing the employee part of the business. And then the other component is you as an employer. As an employee, you can put in $19,500 in 2020, or if you're over 50, you can put in $26,000. Then, as an employer, you can add an extra 25% profit sharing contribution for whatever your business made, or 20% if you have a single member LLC or sole proprietorship. So you'll add those two numbers together, but there's also a maximum contribution amount that you have to watch out for. In 2020, you can't go over $57,000. Or if you're over the age of 50, your maximum is $63,500. So let's do another example. So let's say it's 2020 and your business makes $100,000. You're 45 years old and you have a single member LLC. You as an employee can contribute $19,500. You as an employer can contribute $20,000, which is 20% of $100,000. So when you put those two numbers together, that's $39,500 you can contribute. And that is pretty amazing and a lot more than a SEP IRA. Now in 2021, the numbers are going up a little bit. So your max contribution there is $58,000 or $64,500 if you're over the age of 50. Another option is a Roth solo 401k, and this is treated very similar to a Roth IRA. So definitely check out which brokerages allow this, because when I checked, there weren't that many who offer a Roth 401k. Another interesting thing about solo 401ks is that some brokerages also allow you to take out loans against them. SEP IRAs don't allow that. All right, so let's just compare the two side by side, SEP IRAs and solo 401ks. Now this is just a general overview and it's going to vary based on your age and the brokerage, so definitely do your own research. With a SEP IRA, almost any type of business can have one. With a solo 401k, it can only be used on a one-person business or a person and their spouse only business. SEP IRAs behave a lot like traditional IRAs. Contributions are tax deductible. With a solo 401k, you can do a Roth or a traditional 401k, but this also depends on your brokerage. With a SEP IRA, you have to fund your employees' SEP IRAs with the same amount that you put in on your own. But with a solo 401k, you won't have employees, so you won't need to fund their accounts. With a SEP IRA, your contribution can be 20 to 25% of your yearly profit, or up to $57,000 for 2020. So for $100,000 profit, you can put in $20,000. With a solo 401k, you can contribute 20 to 25% of your yearly business profits, plus an employee contribution of $19,500. So for a $100,000 profit, you could put in $20,000 plus $19,500. That's in 2020 for a total of $39,500. All right, I hope this video has helped you learn more about the SEP IRA and the solo 401k. If you have any questions about it, please leave those in the comment section below. And if you like this video and you want to see more videos like it, just hit the subscribe button and the little bell next to it and you'll be notified every time a new video comes out. All right, thank you.